Binance is a massive, unregulated global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went. Why should we care? Single reason. I'm a shareholder. You tell me the two largest shareholders do a transaction together, that's a related party transaction. I'm not sure that's okay. Maybe I want a Madoff clawback on those proceeds. Maybe I want to pursue that.
Kevin O'Leary, a Shark Tank personality and the head of O'Shares Investments, declared again that cryptocurrency exchange Binance and its founders were primarily to blame for FTX, a now bankrupt Bitcoin exchange collapsing. On Tuesday, during testimony at a congressional hearing on the FTX collapse, a Canadian venture capitalist gave his bias hypothesis. When questioned about what he believes caused the exchange's turbulent demise, O'Leary points out that SBF, the disgraced founder and former CEO of FTX, spent billions of dollars attempting to acquire Champagne Zhao's shares in FTX. According to reports, SBF and FTX struggled to obtain operating licenses because of their connections to Binance. However, this sympathetic argument has two major flaws. It disregards, for example, the horrifying fact that SBF and Alameda Research, a now bankrupt cryptocurrency trading firm, spent clients' money funds at will. FTX and Alameda leaders, as well as the executives of connecting organizations, have reportedly been living in luxurious houses in the Bahamas, according to reports that are exceedingly unsettling. According to CZ's tweet, in response to accusations made by O'Leary and SBF, the former crypto tycoon is entirely in charge of the top lane of his multi-billion-dollar crypto empire. He managed the exchange as if it was his own personal money and observed while Alameda officials, including his ex-girlfriend Caroline Ellison, allegedly lost billions of dollars in gambling the customers' money. Additionally, Binance holds business licenses throughout the world, which refutes O'Leary's assertion that it is an entirely unregulated trade seeking to eliminate competition by any means necessary. It is also crucial to note that O'Leary, who paid approximately $15 million to serve as FTX's spokesperson last year, lost the majority of that sum in the company's failure but curiously continues to believe that SBF was nearly entirely blameless.
Directly, you were an investor in FTX, and I know you've spoken frequently with Sam Bankman-Fried over an extended period of time. Why do you believe FTX failed?
I have an opinion. I don't have the records. Here it is. After my accounts were stripped of all of their assets and all of the accounting and trade information, I couldn't get answers from any of the executives in the firm, so I simply called Sam Bankman-Fried and said, "Where is the money, Sam?" He said he had been refused access to the servers. He no longer knew. I said, okay, let's step back. This is a simple case in my mind of where did the money go? And I said, Sam, walk me back 24 months. Tell me the use of proceeds of the assets of your company. Where did you spend it? And then he told me about a transaction that occurred over the last 24 months, the repurchase of his shares from Binance, his competitor. I didn't know this at the time, but at some point, CZ or Binance, who runs Binance, purchased 20% ownership in Sam Bankman-Fried's firm for seed stock. And then, over time, and I asked him, what would compel you to spend $2 billion was the number he was giving me at that time. Later, in a subsequent conversation, about 24 hours later, he told me it could have been as much as $3 billion to buy back the shares from CZ. I asked him, what would compel you to do that? Why wouldn't you keep your assets on your balance sheet? And why would you offer this to just one shareholder? He said, because every time we went to get licensed in different jurisdictions, because you must understand the prize of crypto is to get regulated. For all the talk we say about Bitcoin and everything else, no institutions own this. I work for the sovereign wealth and pension plans. They don't touch this stuff because it's unregulated. Between these two, let's call them frenemies, because they obviously were potentially the two largest shareholders in the firm, they had a disagreement. They had a falling apart. Apparently, according to Sam Bankman-Fried, CZ would not comply with the regulators' request in these different geographies, these different jurisdictions, to provide the data that would clear them for a license. He withheld it, according to Sam Bankman-Fried. The only option the management and Sam Bankman-Fried had was to buy him out at an extraordinary valuation of close to $32 billion, less apparently a 15% discount. That stripped the balance sheet of assets. You ask me why it went bankrupt? Go to the last week. All of a sudden, in social media, CZ is asking for another $500 million. He wants to do a block trade of FTT, or the proprietary token of FTX. Wants it converted back to fiat. Why would you put that out there? You know it's going to push down the pressure. It's going to push down the value of that coin dramatically. And that's exactly what happened. Every trader knows that if you have a large block trade, you go negotiate a clearing price with other buyers and you do the transaction. In my view, my personal opinion, these two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went. Why should we care? Single reason. I'm a shareholder. You tell me the two largest shareholders do a transaction together, that's a related party transaction. I'm not sure that's okay. Maybe I want a Madoff clawback on those proceeds. Maybe I want to pursue that.
Do you agree that FTX customers and perhaps your own investments would have been better off if FTX had complied with the existing regulation we have that bars brokers from trading with customer funds?
Absolutely. But they were not compelled to do that because they were offshore and unregulated. I think the model will not work. There's examples of how regulated exchanges that are attached to broker-dealers have worked. You only have to look up to Canada, the OSC order, where BitBuy wallets are controlled by the regulator. They limit the number of tokens. They limit the margin. They limit the lending. They do an exhaustive test of proof of reserves. That's just the rules they implemented that they just copied from their own exchanges.
Right.
We need to do the same thing here. It works. It's been proven to work. There's millions of Canadians that have accounts that are working under a very strict regulatory environment. We can implement the same.
Kevin O'Leary publicly criticized and scoffed at cryptocurrency and blockchain technology in 2017. But as the world's regulatory landscape started to open up in 2018, he started to invest. Today, he is a shareholder in a number of companies using this technology, including a wonderful bid by the biggest and first regulated broker-dealer crypto exchange in Canada. He even admitted that he invested in various cryptocurrencies and Level 1 and Level 2 blockchain infrastructure, including Immutable Holdings, the creator of NFT technology, and Circle, the business that released the USDC stablecoin. According to O'Leary, I am of the opinion that crypto blockchain technology and digital payment systems will be the 12th sector of the S&P within a decade. Many of these technologies are going to disrupt the existing financial services sector with faster, more efficient, more productive, and more secure ways of investing, paying, transferring, and tracking assets. Additionally, in the previous 30 years, every American company has generated significant efficiency using various forms of business software, and cryptocurrencies are no different. As you are aware, Bitcoin, a store of value, is not a coin. It is a software. Nearly 3 years after O'Leary first began directing capital to the cryptocurrency industry in August 2021, Kevin O'Leary signed a contract with FTX to serve as a paid spokesperson. The potential of these crypto technologies is enormous. O'Leary admitted that he received about $50 million for these services, plus another $3 million to satisfy the tax debt. Of the remaining funds, $1 million was put in FTX shares, and the remaining $10 million was retained in FTX wallets. The accounts have been depleted of assets, and it's fascinating to note that the equity is now probably worth less. According to O'Leary, I've written all off to zero because I was a paid Spark spokesperson. However, I never invested any capital from our partners or LPS in FTX. The capital lost was from an operating company that I had 100% ownership in. I'm using my own capital to pursue record recovery of the FTX accounts so I can conduct a forensic audit. Considering these assertions, what do you think? Drop your comments below, please. And for more videos like this one, subscribe to the channel and enable post alerts. Thanks for watching, and please leave your comments and thoughts on O'Leary's testimony in the comment section below.